The big elephant in the room, as the talking point column indicated last week, it's still inflation. US inflation rose 9.1% in June, which is the highest since 1981. A Fed report finds higher fears of inflation and a potential recession. Yield curve inversion between the 10-year and the 2-year rates reaches the biggest point since 2000. And it's not just in the US. Canada's central bank raises inflation and interest rates. Actually, I meant interest rates have given inflation by 100 basis points. So lots happening on the inflation front. The question, the $1 million or $1 trillion question is this reaching a peak, or is it difficult to say? Have we moved on from inflation worries to recession worries, or are we still in the zone where inflation remains the big worry? And what's the possible ramification of whatever the Fed will do to combat this? Well, as usual, we turn to Jeffrey Dennis. He joins us this evening from his time to talk about this and more. Jeffrey, great having you on very important days. Thanks so much for the same today.
Thank you.
So what's your sense, Jeffrey? Is this peaking, or is it difficult to say?
It's difficult to say because this was such a bad. Also, in terms of annual inflation, the comps with last year start to get a bit more tricky in the next 3 months when inflation was much lower in 2021. So the monthly inflation numbers have got to start coming down quite sharply now for the peak of 9.1% to prove to be an actual peak. And I think this was the fact that this 1.3% rise in the headline was such a negative, such a huge surprise. Now, on the good side, is that you've got a tremendous contribution, 0.4% from just gasoline prices alone. That'll turn quite a big negative in July. And the Fed has made it very clear that they're not watching the year-on-year rate so much as trying to get the monthly numbers down. And I think that will happen soon now, and they'll fall quite sharply. At the same time, the core inflation number actually, if anything, slipped a little bit to 5.9%. So there are some straws in the wind here that might suggest that the situation is about as bad as it's going to be. But make no mistake, this was a shockingly bad inflation report.
Yeah. Some optimists say, Jeffrey, that the monetary policy often takes a while to have its full impact. Many central bankers citing 6 months as a normal time frame. So if the Fed does move, whether 75 or 100 basis points in the next policy, and one would love to know what you think. Do you think that then the Fed will start thinking about, let's wait for the impact to show before we take any large serious move again? Or is even that difficult?
That's right. I think that's right. I mean, that's absolutely the right analysis to work through. At the same time as well, of course, we are going to get a lot of help on the inflation front over the course of the next few months because commodity prices worldwide are falling sharply. And of course, they're falling sharply because recession fears are now gripping the
I think we've just lost Jeffrey.
I fully expect the Fed to raise interest rates by 75 basis points at least, possibly. I think 75 is still more likely, but maybe 100 basis points next meeting, and then 75 basis points in September. So by the end of September, we're going to be at 3 or 3.25. And in that environment, I think you will then have some visibility as to how much further the Fed will have to go. And I do think that will be somewhere near the peak towards into the fourth quarter. And so by then, yes, the tightening of monetary policy will be working more significantly on the demand side. And at the same time, of course, you're going to get a lot of help in bringing inflation down, as I say, from the commodity price story.
And arguably the base effect as well coming into play. Just one final question, Jeffrey, on this one is that, the skeptics argue that it's very difficult for people who are deflationists, so to say, to accept that an aging population can have such high inflation. But the point that inflation, since it's not a monolithic structure, but can get impacted by political choices, the trade setup, the commodity complex. Do you reckon that this could stay higher for longer, as in for the next 4 or 5 years, we may have a period of a much higher inflation despite an aging population, say in the West?
I think it's a very, very long question with a long answer potentially. I think yes, that's correct. I think it's higher. I don't believe though that it will stay as high as it is now. I think it'll slowly go down, but it'll probably take 3 to 4 years before we get back to the 2% level. But I think we will get back to that 2% level. I think the important is that inflation is high around the world, pretty much around the world. And that tells you that global factors are playing a big role here. It's not just the Fed's behind the curve or other central banks are behind the curve. It's the commodity boom as the global economy came out of COVID. It's the supply chain challenges on limiting supply. And of course, we've got the energy price story, which is being made much more complex because of the uncertainties over supplies following the Russian invasion of Ukraine. So the number of things going on. One point I'd really like to make, if I've got a moment to do, is the most interesting response in the market today was that bond yields fell. And in the fact that bond yields fell in the US is telling you people think this is close to the peak of inflation. And indeed, it probably means that recessionary fears are really starting to take over here, which in turn will bring inflation down. So I think very quickly now the inflation worries in the next 3 to 4 months will subside significantly, even though the year-on-year rate will still be quite elevated, and we'll start worrying about recession. And that's why I think the Fed will be almost done with their rate hikes come the end of the year when rates are maybe 3.5%. The bond market is a very, very important indicator for what's going on at the moment.
Yeah, that's a pertinent point. And 2.95 is certainly lower than what it used to be. Jeffrey, quick 30-second answer. We've got a slight patchy feed also, but if we can, quick 30-second answer. What's the impact for EMs like India as a result of the print that has come out?
Strength is not being dollar if trade weighted is up 13% this year. I think EM currencies have held up quite well, given dollar move, partly because a lot of countries move their interest rates early, of course. EM is down no more than DM, which is quite a good performance. So I think when equities start to turn in the US, which is not far away, as long as the dollar doesn't go sharply higher, EM will recover. So it's not been as bad a year for EM as you might have expected.
Okay, that's great. Jeffrey, thank you so much for your time this evening, and have a great night.
Thank you.
All right, that's somebody who's looked at EMs so closely, as I always say, and could be interesting if indeed the tide were to turn. Remember, Taimur Beg in our series Navigating Through Uncertainty, Taimur Beg of DBS also mentioned that you could actually see the fears getting exaggerated currently in the month of July, maybe mid-August, and then the inflation fears starting to come off as well. So a lot of people are actually thinking from that perspective that inflation cease to be a worry come the end of the year. The next 3 months unpredictable. Post that could be an interesting period. Nevertheless, let's move on. So that was the big elephant in the room and therefore needed some time to tackle. I'll be quick with the other aspects. Other news flow, Chinese exports rose at the fastest pace since January. Dutch confirmed talks with US on chip making gear ban on China. The US-China conflict continues, so to say. India is seeking 551 million from Oppo, a Chinese company, for evading duties as well. So lots happening out there. We've already shown you the key cues. The SGX Nifty should come up on your screen next, and I reckon already slipped below 16,000, and there could be some more downside today if the SGX Nifty. I reckon the SGX Nifty would be showing that we are likely to start off lower. The question is, can we build on from there? 15,900. Let's wait and watch. The trade setup, I think if there is sustenance below the 16,000 mark, then it kind of breaks the uptrend. And then 15,700 to my mind remains the key support. I'm not a technical expert. I'm just basing this on the back of the recent supports and resistances. As per technical parlance, 16,040 and 16,140 remains that sturdy wall for the weekly expiry session today. I doubt we'll go there, but if indeed there's a bit of a pickup, then this remains a wall for the weekly expiry. The sentiment remains damp around IT. Mindtree is probably an exception, but autos certainly continue to remain a favored pocket on dips. Now, is this a dip that gets bought into? If you think so, then autos is probably the port of call that you need to make, as per experts. Now, results today include LTI, and it'll be interesting to see if they kind of emulate Mindtree. Tata Elxsi, which could probably be stronger than some of the others. Angel One, they've defied the performance of other broking companies even in the last quarter. Can they do the same this time around as well and do better than some of the discount brokers? And ACC, which has got a tag of underperformance rating from a bunch of brokers very, very recently. Let's see what this one dishes out. The stock of the day will be Mindtree. Revenues up 7.7%. The estimates were 30,083. They gave them 3,121. So largely in line, maybe marginally better. EBIT fell to about 598 crores. The expectations were 562. EBIT margin at 19.17. The estimate was 18.24. Net profit 471 versus the estimate of 461. The importance is not that they have beaten the estimates ever so marginally. The importance is that they have done this well and beaten estimates when most of the other peers are finding it very, very difficult to do so. Could it be a mid-cap IT trend? Could it be, a Mindtree trend? I think time will tell, but my suspicion is that Mindtree should get rewarded. The other highlights, by the way, quarterly TCV wins the highest at $570 million, so they're doing well. The LTM attrition, though, for them as well inched up, even though the company expects moderation ahead. And the company's upbeat on demand for FY23, but remains cautiously optimistic beyond that. So nothing too dramatic beyond the first half, or difficult to predict, say. So what are brokerages saying about Mindtree? MK maintains a buy with a target price of 3,400 for various reasons, of course, that they are saying, including the benefits from the merger synergies. Nomura has actually raised the FY23 and 24 EPS by 2 to 3% to factor in better margins and increase the target price as well. Imagine somebody's increasing the target price on an IT stock. It's trading at 20 times, they say, and they prefer Infosys, of course, in the large cap space. So watch out for that. But Mindtree clearly will be the stock of the day today. Tata Metallics, the numbers didn't look great at all. The question is, could this be in the price? Who knows? Imagine the cost of material for a Tata Metallics went up 64% YOY. EBITDA margin have collapsed. Net profit 98% drop. Well, maybe some of it is in the price, but maybe the stock reacts today on these numbers. Tata Power and JSW Energy, both of them have received a letter of award from Solar Energy Corporation for setting up, in Tata Power's case, 600 megawatt hybrid project, wind and solar. And in JSW Energy's case, a wind capacity of 300 megawatts from the same company. So, well, power companies continue to get some awards. Sanofi is an interesting one. They're going to consider a one-time interim dividend on July 26th. Incidentally, Hindustan Zinc has announced a special dividend, so both of those remain in focus. Some analyst actions include Ambuja Cement, which has been cut to reduce at HDFC Securities, or a JK Cement raised to add, J Kumar cut to add, and Siemens raised to add at HDFC Securities with these various price targets. So, well, these are the other interesting ones. But I suspect that Mindtree would be in focus. The expectations now get heightened from Persistent Systems as well. So that remains in focus. Just trying to get you maybe a couple of other stocks that you should keep in mind. The newspaper reports suggest that Piramal Enterprises and Piramal Capital and Housing Finance is set to sell some distressed assets portfolio. Gujarat Gas, wherein there's expectation or talk of Morbi units planning a shutdown, which may hit those volumes. So do watch out for that one as well individually. What else? Yep, these are probably the couple of names that you should be watching out for, viewers. As we wrap up trade setup today, a couple of things. A very interesting conversation. I think it'll be very interesting with Kenneth Andrade. He's the guest on Talking Point today at 10 a.m. It's lovely to hear him every day, and I'm sure this time is no different. You might want to tune in for that at 10 or later on all our platforms and our website. So you might want to keep this conversation at the back of your mind. And of course, for everybody who's a Twitter aficionado, it's the Thursday, and we talk to two experts on their specific strong suits. In the case of Mayuresh Joshi and Deepak Shenoy, we thought it's best to talk about whether we are in a bear market rally, and if so, what are the pockets that should be invested in or invested out of. So tune in today to maybe try and hear this every Thursday at 8 p.m. on BQ Prime Twitter. Thanks so much for tuning into the Trade Setup today. Have a safe day ahead.